Hello investors, my name is Dehan and welcome back to your number one place for all your investing needs. So in today's video, we're going to be going over the top 5 stocks to buy in January. So this is going to be the first video of 2021 on our channel. These are going to be the top 5 stocks to buy in January 2021. Obviously, these are going to be stocks that have some potential or news coming out in January, and that could potentially drive these prices up. Now, some of these are going to be having events that are going to be causing volatility in the market for them, so they could potentially go up, they could go down. It all depends on the news that happens with them, and that's why we're going to be going over them in our list. So the first stock we're going to be looking at in 2021 is going to be NIO. The reason we have NIO is obviously with the EV market exploding, especially in China right now. NIO is the number one company in China right now that is exploding as one of the Chinese companies. Obviously, they do have competition with an American company like Tesla, but NIO is the Chinese version that is doing amazing right now. And they have NIO Day coming out on January 9th. And NIO Day, they're going to be announcing some big things that could potentially cause the price of this stock to rise on up with some positive news and some events coming out. So they might be releasing a new car. They might be releasing some new batteries. We don't know what's going to be going on with NIO and in the event, but it's going to be very, very big, and a lot of investors are really keeping a close eye out on this one. And we're going to be looking at the price action. So in the past year, obviously, this stock is up over 1,100%. But here, if we look in the last 5 days, the stock is up about 6%. On Friday, the stock did go up actually to a high of about $50.42. So it was getting a little bit up there. Obviously, it pretty much lost all of its momentum towards the end of the day on Friday, but that's okay. Currently, NIO is trading at $48.74. Market cap is currently at $76.16 billion. So the market cap is actually getting pretty high up there. The stock is getting pretty valued. Some might say it might be a little bit overvalued right now based off of its profits and earnings, but the stock is still rising. We have Tesla, obviously, whose earnings are, doing amazing, and their company is growing very, very fast because the market is always looking far ahead. The market is not trading out based off of the prices right now and the profits right now. It's trading at a future price. So if we look at their previous earnings here on 11/17/2020, EPS actual was negative 15 cents, beating by 2 cents. Revenue was 690.26 million, beating the revenue estimates by 24.66 million. Now the next earnings is supposed to be sometime in February, I believe, and as EPS estimate is negative 10 cents. Revenue at 919.97 million. So we're going to see how the revenue turns out to be for the last quarter, obviously, right there, and hopefully the revenue actually hits 1 billion. That would be nice to beat it by a little bit higher than what they expected. But NIO Day is going to be huge. We don't know what's going to come out of the NIO Day, but I can tell you it's going to be something big. It's going to cause some fluctuation in the price. The stock might go up, it might go down. We might have a sell the news type of event, but I'm definitely keeping a close eye out on NIO. I own NIO obviously in my portfolio, so I'm obviously hoping for some positive news on this one. But let me know what you guys think in the comments. Do you think NIO is going to continue to go up into NIO Day? Do you think it's going to go up after NIO Day? And what's going to happen with it? Since we finished off our first pick, guys, go ahead and smash that like button. Let's get 100 plus likes on this video. We're almost at 11,000 subscribers, so let's go ahead and subscribe to the channel and turn on that bell notification so you get notified every time I make a new video. I make penny stock videos, blue chip stock videos, dividend stock investing, all types of investing videos. So if you guys are interested in that, stick with the channel. If you guys want to sign up for Webull, get your free stocks, link in the description. M1 Finance and Robinhood as well, link in the description for those as well. The second stock we're going to be looking at in the month of January is going to be another big one. It's going to be ticker symbol ENPH. So this is going to be Enphase Energy, one of the biggest clean energy stocks right now in the market. Actually, Enphase Energy has been doing amazing, and this stock has been amazing this whole year. 571% that it's gone up. When the Rona started, the stock was trading at $24 per share, and now it's trading at $175. It was at a high of about $184 per share. This stock has been on fire, and I've been in this stock actually since it was $8 or $9 per share, thanks to a friend of mine that told me about this company. So this stock has been doing amazing, and I think it's going to do even better in the future, as the market cap is only at 22.17 billion and the stock's trading at $200 per share almost. This stock could be a $100 billion market cap company in the next 5 years. So this stock could be trading at $1,000 per share. Obviously, I'm going to be expecting a split in the company. That way the share is going to be cheaper per share, obviously. So that's what I'm expecting in the future. But this company has a 22 billion market cap. I think that's very, very low for Enphase Energy, and I think they have so much more room to grow in the next few years. Now, if we take a look at their previous earnings, actually, and all the quarters, they've been doing amazing. So on 10/27/2020, EPS actually was 30 cents per share, beating revenue by 6 cents. Revenue was at 178.5 million, beating estimates by 9.11 million. Next earnings date is supposed to be sometime in February, and it's going to be at 40 cents per share. Revenue estimated is 255.2 million. So, obviously more than the previous quarter, and especially with, more places were open because of the Rona. So they were able to produce more stuff and obviously put them on people's houses and things like that with the solar panels. So that's something we'll be looking at in 2021, especially now with Biden being our president. I think that the clean energy stocks are going to be doing amazing. Obviously, like we already talked about, NIO, Tesla, Enphase Energy, and many other companies, they're going to be benefiting from him being the president for the next 4 years. He is pushing more towards that clean energy. So these companies are going to be benefiting because they could get pushed by the government, and they might do better and better. That way they can make more revenue and more profits. So I think Enphase Energy is a great stock to look at in January and further on, not just in January but 2021 as a whole, and just the next 4 or 5 years. This company, I think, is going to be doing tremendous things, and it's a great buy. The third stock we're going to be looking at in January 2021 is going to be ticker symbol BABA. So this is Alibaba Group Holding. This stock is currently trading at $232.73. In the past year, it's only up 9.73%, but let's explain that. What happened is here, in the previous month, this stock here had horrible news. It went from $256 all the way down here to about $216, $215. So it had a huge pullback here of about $40 per share. And obviously you can see now the stock is starting to recover back up. Obviously in the long term, this stock is going to recover. Whenever you see companies like this that are, healthy companies, blue chip stock companies that are big, and you see a sell off like that, it's always a great buying opportunity because eventually it's going to come back up and make up all those losses. So this is a perfect buying opportunity. You pretty much bought this company at a discount. Why wouldn't you want to buy Alibaba right now at a discount? Would you rather buy it at 255, or would you rather buy it down here at 216 or now 232? Obviously I would buy it at the cheaper price because I can make some more gains on that stock. So this company, in my opinion, is actually undervalued right now. It hasn't done as well in 2020 as it should. It was trading down here at $180, and now it's still $232. So it's only went up about $50 per share in the past year or so. So this company is still undervalued in my opinion, and it has a long way to go. It doesn't have a dividend, so there's no dividend with Alibaba. The market cap is 629.68 billion. But if you compare it to Amazon, because Alibaba is the Chinese Amazon is what everybody calls it. Compared to Amazon, this company is undervalued in my opinion, and I think that China has a higher population, and I think that China has a bigger opportunity for Alibaba to grow even further. If we take a look at Alibaba's earnings here on 11/5/2020, EPS actually was $2.72, destroying the EPS surprise by the beat was 65 cents. Revenue 23.48 billion, beating revenue by 190.38 million. And then over here we have the next earnings, obviously in February. Once again, EPS estimate is $3.32, revenue at 32.96 billion. So that's almost about $10 billion more than the previous quarter. I think Alibaba is going to destroy it. Obviously, we had, Christmas and the holiday events and things like that. And especially with the Rona, worldwide, a lot of people are ordering things online, and, people are getting more packages. And that's why Alibaba is also going to be benefiting, just like Amazon is going to be benefiting from all of this, in my opinion. FedEx, UPS, companies like that, they're all going to be benefiting from this, even eBay, in my opinion, because people are doing things more online and not doing it in person. All right, guys, coming in at the number 4 spot for January is going to be ticker symbol SBE, which is going to be Switchback Energy Acquisition Corporation. So a lot of you guys might not know actually this stock, because this is going to be one of those stocks that is benefiting from the EV world. So basically what they do is they make chargers for the EV cars, and that is why SBE is going to be on our list. So if you guys are familiar with Blink, BLNK, which is another charging company, this is very similar. SBE and BLNK, big competitors, obviously. So this stock was trading around $10 down here, 2 or 3 months ago. And then we had some highs here of $37. Then we had another high of $41 and then $46. And we made a little bit of a pullback. But this stock is up almost 300% just in the past 6 months, currently trading at $40.08. This company is going to be huge. The market cap is only 1.57 billion, so this company is just starting to grow. It has so much more potential. This stock could, 5x or 10x in the next 5 to 10 years. So I see a lot of potential for this one, especially as more and more countries are starting to move towards that, clean energy, like we said, electric vehicles. They're going to need more charging stations, and that's where SBE is going to come. I've actually, made a video on BLNK in the previous month, so if you guys want to check out that video, and I'm actually going to be making a video on Switchback Energy in the next couple of weeks, actually going over their, analytics, going over their profits and everything, earnings. So if you guys are interested in that, stick around for that video. If you guys are interested in that, stick around for that video because I will be going over this stock more in depth. But I think this is a great buying opportunity as the EV world is just starting to move right now, and I think they have so much more space to grow, and that's why I think SBE is going to be a great buying opportunity right now for the future. And then last but not least, at the number 5 spot for January, we have JPM, which is going to be JP Morgan Chase. So obviously this is the big boy, the big bank, $127.07 per share. Year to date, in the past year, the stock is down actually almost 9%. Obviously, because the Rona, it was trading at 137, pulled back down all the way down here to a low of about $76 per share, and we've been continuing to rise on up. So obviously, it was hit hard, but I think that banks are going to be making a comeback. JP Morgan Chase, Bank of America, two of the biggest ones in my opinion. I think they have a lot of room to grow as, the economy starts to roll back up. I think the banks are going to do very well, and obviously I don't think the government is going to ever let the banks fail, and that's why I think that JP Morgan Chase is a great buying opportunity right now because it's actually at a discount in my opinion. It's, it has a dividend, which is a positive thing, a dividend rate of $3.60 per share yearly. The yield is at 2.83%. Their market cap is only 387.34 billion, so it's not, it's a big company obviously, but it has more room to grow. If we take a look at their dividend, like we just talked about, it's 90 cents per share. Their 4-year average yield is 2.61%, so it's a decent dividend with this company. And then their dividend growth, years of growth, 10 years obviously. Here when we had the market crash with the whole real estate and all the other things, the stock had, they had a dividend cut. But they've been growing for the past 10 years, $3.60 per share, 90 cents quarterly. If we take a look here at their dividend history, every single quarter they pay out that 90 cents, like we said. And then their dividend safety, the payout ratio is very low, only 47%. It was even down here in the low 30s actually previously. Earnings have been amazing. On 10/13/2020, EPS actually was $3.09, destroying the revenue by 85 cents. Revenue was at 29.15 billion, beating the revenue by almost $1 billion. That is a huge beat for JP Morgan Chase. Their next earnings are going to be coming up actually in about 2 weeks. It's going to be estimated at $2.46 per share at 27.88 billion. I think they're going to beat earnings. I think they're going to actually destroy earnings again. So I think that, JP Morgan Chase and all these other banks are going to be having a comeback in 2021 and continue on further up. So guys, those are going to be our first 5 stocks for the beginning of the year for January 2021. What do you guys think? Let's start off the year with a bang, right? So the Dow Jones obviously at all-time highs right now. On Friday, we closed the year off on the green note. We were up 196 points, almost, a little bit over 0.5%. So the Dow Jones, the Nasdaq, S&P 500, everything is on fire right now. We're going into 2021 on a positive note. We're hoping that 2021 is going to continue to, be a bullish market for us and continue to trend up. Maybe with this, whole EV world and the clean energy stocks, they're going to start pushing things up, and we'll see what, what type of stocks are going to be going up in 2021. Is the tech going to continue to boom and, beat everybody else, or is something else going to continue to, roll on up? So if you guys enjoyed this video, go ahead and smash that like button. Let's get 100+ likes on this video. Subscribe to the channel for more content like this coming out throughout 2021. Leave a comment below. What stocks are you buying? What stocks are you selling right now in January? And what you guys are seeing for the year. What do you think is going to happen throughout 2021? I hope to see you guys next time, and goodbye.